Nah, I'm not doing this portfolio update. I'm out. Hey all, Choiboy here. Welcome to another video. Today we got the April 2021 Sharesies Portfolio update. Quite an interesting month. A lot of people were quite anxious about the market recently and stuff like that. So there's something to cover this time as well. Just a disclaimer, I'm not a financial advisor. Please do your own research before you buy or sell on the stock market and take everything I say with a grain of salt because I'm not gonna be right all the time. Nothing more to say, let's go straight into it. The value of the portfolio is... Wait, am I reading this right? Is that really $16,000? Nah, I'm not doing this portfolio update, I'm out. Hello, I'm back. I had to add a drink because look at this number, makes me really sad. Really sad. I infused nearly $10,000 into this portfolio early in January to buy a bunch of Blackberry as well. And look what happened. I'm back to kind of like the level I was before I put in that 10k. So let's go into the numbers real quick. I'm down $2,745, which is around 14% down. It's not the worst. I mean, you know, I could cry about the numbers, but at the end, I kind of half expected it. Then again, I have these diamond hands. Diamond hands. Hopefully it lets me touch some real gains in the next couple of years. But until then, I'm not expecting too much. And this is why I'm not putting in more money just yet, because not only that I'm kind of low on cash, but also I just want to see how the market reacts if there is a full-blown kind of correction. But yeah, I'm kind of crying inside. That is kind of saddening for sure. Anywho, the graph kind of looks like this now. It's kind of dipping quite a bit. It has never returned back to a positive cycle here, so it's just consolidating down. There's actually not that much difference compared to the previous one. It's just as bad really. But yeah, look at it. My value was at a high of around $16,000 before I put in this amount of more cash, and now we're back to the same level. So this new portfolio didn't really do me any justice at this moment in time. It's not the greatest, but then again, it is really important. If you believe in the company, you just hold it out and just let it do its thing, because we're all gonna see cycles of, you know, ups and downs in the stock market. You gotta have some patience, right? So a lot of people might look at my portfolio and think, hey, why, you're stupid, why didn't you just sell it off? You really don't know what's gonna happen and when it's gonna start pumping, when it's not. You know, no one really knows what's gonna happen. So that's why if you believe in it, you just put it in and forget about it. Then again, we got people who day trade on the stock market, which I don't really recommend for most people either way. Selling them at a loss is also not my kind of thing as well. You know, all my companies are negative now. You know, all those nice positive company returns was really nice before, but yeah, I can't see them anymore. But either way, so let's go into them really quickly. So Blackberry, same old. We've seen some crazy dips in Blackberry for sure. So at a high of $25 or so, we've seen it go down even lower to like $8. And I think I saw, I don't know if I saw $7 range before, but yeah, $8, like low 8 was pretty scary actually, but it kind of jumped back. So the common theme with Blackberry is that it's holding a very nice consolidation phase at this moment in time at a range of between $8 to $10. It's just bouncing between that kind of, you know, range, which is good, because if it doesn't fall any further from here, that means it's creating a very solid foundation at a support level for the future, you know. So that's something to look forward to, I guess. Blackberry, I think it's got a few earnings report to kind of get across to the investors to tell them, hey, we're actually doing pretty fine, guys. We're really set up for the future. just believe in us. We kind of have to see that in the financial reports. And the 31st March or something like that, at the end of last month, we saw earnings report from Blackberry. It wasn't the greatest. I mean, it wasn't the worst, but they had a bit of a lower kind of revenue stream for the quarter. It was not as high as what people were expecting. I think people were expecting something about the Facebook settlement coming into the earnings report as well, but I didn't see anything like that in the previous earnings report. So I think that caused a lot of kind of discomfort for a lot of these investors to keep holding, because I think people got really interested when they were like, hey, we won Facebook, guys, settlements in place. So, then you're expecting a bit of cash rolling in from that, but didn't see anything from there. Of course, it's going to take a few months to, to settle. And there's probably a lot of legal stuff happening in the background as well. So we're going to have to wait it out and see how it goes. But nonetheless, my confidence in Blackberry, it doesn't change. It's the same old. Just going to hold it out. If it does stay at these level for much longer, I might buy a bunch more here at this price range. I'm not in a rush to kind of put more money into Blackberry. I do have quite a bit in it already anyways. I think I'm gonna just wait it out and see if I do have some cash lying around that I could probably dispose into the stock market. funny choice of word, dispose into the stock market. If that happens, then it's probably gonna go to Blackberry, but we'll see from there. Next, we got Plexure. So Plexure is another thing that people have been asking a lot about. Because I'm the Plexure man, as all you guys would, know as, really. What is happening? I really don't know. I don't really know. Like, what I do know for sure is that we haven't really delivered anything to the public for a good couple of months now since the ASX listing. And this caused quite a lot of disbelief from the investors, and they have no incentives to hold it out, because no, we're not a dividend company, so we don't pay dividends. There was no new kind of deliverables that was delivered, no new clients, no new announcements. So I really can't say much about the fall, because it was kind of half expected, because from $1.55 it went down to $1.20 because of the capital raise, and after that it just kept falling because there was nothing, interesting about the company. So this is fine with a crying face. This is fine. I do believe the company should be kind of keeping the investors excited about their growth and stuff like that, which I guess there is a bit of a gap there. But either way, I think it's a great company still. It's still got some really good revenue streams, so I'm not too worried about it. I am kind of sad to see the market cap go down quite a lot, back down to like 130 mil, and this is post capital raise as well, so it's not even the same amount of MCAP compared to when it was 75 cents before. We'll just have to see about it. I think the financial report should be coming out sometime in the next month or two, so I guess a lot of people might be looking forward to that. If that doesn't look good, then it's I don't know how much more it's gonna fall, but it will fall more if the financial report doesn't cover well of the lack of deliverables, I guess. So at least if we're earning a lot of money, that's a good incentive in the first place to invest in the company, right? So I guess that's like the least we could do for now until exciting news hits the market. But yeah, other than that, it's gonna keep falling until something happens. Yeah, who knows how long it's gonna go on for. But the fundamentals has not changed. That's all I could say. I don't think the fundamentals has changed in terms of the technology and the consumer base. It's a growing company, so we'll have to look into that. The last one is Virgin Galactic. So Virgin Galactic is another quite a quick one here. It's kind of back to the prices where I bought before, between 28 and like $23. So we're back down to these levels. It did have like a bit of free fall moment here from like $30 all the way down to like $20. Then it kind of came back up to the $23 range. So that shows that there's a bit of support around here in the $20. I think that's more psychological than anything else. So I guess we'll just have to see about it, really, because I guess the previous kind of resistance level is becoming the new support level, which is really good. When we see the resistance line become a support line in the future, as we can see here, you know, that's a good sign that the company is making a higher basis and a higher foundation every time it goes up the ladder. So that's always a good thing to look for in the stock market, and I do believe it is quite early for this company to boom just yet. I guess us investors in Virgin Galactic, we're just looking at the future potential of the company, but present wise they're not doing too much in general. There's nothing much going on, so you know, we'll just have to wait it out. Once again, it's kind of like a speculation based kind of stock right now, which we'll have to see. Just one more thing before I close off this portfolio update. So I think there is quite an interesting thing happening right now. We keep seeing the market being artificially sustained by stimulus money and, you know, the Fed just printing the heck out of the money. How do I feel about this? Not so great, really. You were expecting some kind of correction at this point in time. It's just not a smart idea to put more money at this point in time, especially into the market. For example, ETFs, I'm scared to put money towards anything like the S&P 500 because it just doesn't make sense. Economically, we're just far beyond what is sustainable, and without a proper correction, it's not going to be like a, yes, we need to put money into the market. I think people are probably going to start, you know, hoarding cash a bit and just not investing it elsewhere. I really wish the stimulus money kind of stops at a certain point, because people tend to make really bad investments when they have free money to just pour anywhere. You know, they either, I guess most people won't even invest it first of all. For the people who are in a more unfortunate situation, they'll probably have to use the stimulus money to just live. But also for people who actually don't need the stimulus money, they'll just put it into random ass coins and random ass stocks. You know, it doesn't really have a positive impact to the market in the overall grand scheme of things. So we just have to be careful at this point in time. We really don't know what's going to happen. This is why I'm kind of hesitant putting my own money into the portfolio anymore. But then again, I think I'm well set up for the next 3 to 5 years. So keep that in mind, guys. My portfolio is not a very short-term thing. It's a very medium to long-term kind of thing. And also, you know, I have other plans to maybe buy property in the next couple of years and stuff like that. So, you know, I have to have a balance between cash, you know, and investments and other investments as well. So, you know, we'll keep an eye on it, but for now it was a very boring portfolio update. It wasn't much going on, but it does show you what stock market is all about. It's not always green and, you know, happy days. We do see days like this where the number is quite, you know, quite low, quite negative, but you know, at the end the people who win are the one who were patient, and I do believe that patience is probably like the number one thing in the stock market. So I hope everyone follows that kind of mindset. If you liked today's video, give it a thumbs up, put a comment down below what you thought, subscribe to the channel if you haven't already, put the bell notification while you're at it as well, and I'll see you in the next live stream. I'll catch you around and see you next time.